All right, y'all. Proof of workforce live. We have Tariff Mania. Besson says we're up two, down one. Meanwhile, U.S. pensions are down 169 billion throughout the U.S. And the SEC chair, newly named chair, is pro Bitcoin and more. Punch your time cards. I got Chris Alamo here. This is where workers and wage earners grab Bitcoin signal. Let's roll the first clip. We're starting off with Tariff Mania, and Besant has some words of advice for those who are worried about the latest tariff impacts to the economy.
The up two, down one is not a bad ratio, or up 10, down five. And I think, as we have talked about, as we go through the queue and settle with these countries who are going to bring us their best offers, we will end up in a place of great certainty over the next 90 days on tariffs. But we had very good inflation numbers today. Oil's down. We had a successful bond market, so I don't see anything unusual there.
All right, Alemo. So Besant says everything's under control. They're up two, they're down one. I don't know. What do you buy it, or are you saying like, well, it's out of control?
I'd say I don't know. It's kind of like a short to medium term pain. I think long term it's going to be good. Obviously, right now, like it's kind of like he said up two, down one, but also it seems like every other day, it goes like the wind. Like Trump's like everyone's getting tariffs, no one's getting tariffs. China's getting tariffs. China's getting really big tariffs. Everyone else is not getting tariffs. China's not getting tariffs. 10% tariffs for everyone. But so it's all over the place. I never know which way they're going to go. I don't think the markets know which way they're going to go. As like he was kind of saying, like we've been down the last couple weeks, and now we were up huge yesterday. Now we're down again today, so it's kind of all over the place. But that's just my thoughts on it.
Yeah, I think the Dow and the S&P notched like top 3 days of all time. So, for those listening, Besant's saying we went up two, and then today markets were down like 1,000. But I'm not really good at math, Alema, but you can't discount last week, Thursday and Friday, which have had massive skids. And so I don't know if you can say we're up two, down one. But what I do know, Alemo, is an article came out in Pensions and Investments Daily, and we'll pull that up real quick. Basically, what it said was the drop that occurred on Thursday and Friday primarily wiped out about $169 billion from the top 25 state and local public pension funds over a 5-day period. We had a little bit of a bounce back, as we saw, and then the big bounce back yesterday. However, what it's saying is that a staggering 249 billion, basically $250 billion loss in public equities across pension funds in 2025. Since 2025 has started, it kind of gets you thinking, what happens when the deck gets reshuffled? We talk about it all the time on this show. Are workers and wage earners and pensions going to be on the winning side? I'm not sure. Coming into 2025, state and local pension funds had an average of 80% funding ratio and 1.37 trillion in debt, making this shock particularly concerning for pension fund stability. I guess we'll find out over the next several weeks, but definitely when reporting time happens in June 30th, how pension funds did during this whole markdown period. I don't know. What do you think, Lemo?
I guess my thoughts are it's tough because I'm all for salaried people, wage earners and all that, but at the same time, on the other side of the coin, there is the retirees or the newly retired folks. So it almost feels like two forces that are like hitting to each other. It's like, Dom, you and I are wage earners, and we've got hopefully at least a few decades left of still earning wages before retiring. But it always seems like Wall Street, and I'm lumping the retirees in with Wall Street here, that like they're the ones that have done well. I guess maybe those on fixed income haven't done as well, but like the retirees in Wall Street have done well over the last, 20, 25, 30 years. Where like everyday wage earners, things are getting more expensive. They don't have as many assets. They're struggling to pay the bills. Inflation's running hot. Housing's go up. Bitcoin's up if you haven't bought it over the last, 15 years. Like everything's going up. So it almost seems like things need to go down in order to allow like the good thing with recessions, and I'm not saying or recessions, but when the markets go down, it allows people that have not had the opportunity a chance to get in. If housing goes down, it gives an opportunity for a wage earner, a family to buy a house. If the stock market goes down, it gives a person a chance to buy more equity or shares at a cheaper rate. When Bitcoin goes down, what's the saying? Buy the dip, stack sats. You're getting more sats per dollar. So it just kind of feels like there's two things that are colliding right now. I think Besant and Trump and the Trump admin, basically in the short to medium term, they want the markets to go down because they want to cut the high prices. And I know our good buddy Dr. Jeff always says like high prices cure high prices. I think by saying that is like they need things to come down to make things cheaper for the everyday worker and the everyday American, because you can only run inflation so hot for so long. You can only run housing so hot for so long. You can only run X, Y, and Z gas prices, groceries, like things need to come down. Otherwise, we get into this crack up boom, which people have been talking about for the last 2 to 3 years, where what if we have a depression where it's not stagflation or like even inflation, it's like a crack up boom where all assets just keep going up. And that doesn't give an opportunity for everyday workers and wage earners to get into the markets, to get into housing, to get into food. Like that's when like really, I mean, not to be hyperbolic, but that's the time when like revolutions happen, when civil unrest happens. That's very bad time to be a politician or even like a CEO of a corporation. I'm not advocating for violence, but I'm saying that is what happens when it gets like the disparity between wealth gets so great. And it's already so great now, but if it only gets worse, that exacerbates things. And I don't think anyone wants that to happen.
Yeah, no, some good insights there. I mean, I think this. I feel like when these big, I'm always feel like liquidity is being shifted around and values being shifted around. And I just feel like the pension funds, the workers and wage earners, it's sometimes, I mean, look at this crash. It happens so fast. If you're not off 24/7 to reposition yourself and benefit off of this dip and then run up, who's the one who benefits? And we're going to find out really soon here as pension funds report their earnings and how they did for the year. That's due on June 30th. There's still some time left, but it goes to point out that pension funds and retirement funds, whoever is leading those funds, they're playing in the big kid sandbox right now, and they're going up against folks that are ruthless and will sell their family, to get a profit and do well for their fund or prospective fund. So I don't know. We're going to find out real quick, when the deck gets reshuffled, how workers and wage earners did. Either way, we talk about this all the time. And even for critics of Bitcoin, here is something where the Bitcoin, the price can fluctuate, but the deck cannot be reshuffled. You cannot take Bitcoin out of circulation, change the metrics. You can't inflate the supply. Only thing is the price is going to fluctuate. So we're gonna see what happens there. In other news, the SEC has announced a new chair, and he goes by the name of Paul Atkins. And it turns out he said quite a bit about Bitcoin and digital assets in the past. Let's roll a clip from Paul Atkins, the new chair of the SEC.
So that's why to have something that is not controlled by any particular entity, is not centralized, is a trustless type of product where you have all the different miners who, the validators who are validating various transactions and then appending them to the blockchain, makes a lot of sense.
Okay, so a little quick clip there on, showing at least a decent understanding on how mining works, how the decentralized network of Bitcoin works. He was talking about Bitcoin just prior, so he's referring to Bitcoin there. I don't know. People think that Gensler was deep down a big fan of Bitcoin, but he didn't let that stand in the way of what he was doing at the SEC or the marching orders. Paul Atkins has said that clarity on Bitcoin and crypto is his top priority, providing clarity, and that the ecosystem has value to the United States. Big change, Alemo, from the last administration, and it seems like there will be some clarity provided there.
Yeah, no, I hope so. As kind of you were insinuating that, providing clarity to Bitcoin and the crypto industry at large, the only thing I worry about is that the narratives from, 2018, 2020, 2021 of like the crypto industry. I'm not saying that I advocate for them to have stricter and harsher regulations, but it's like, providing clarity. What's that mean? Like, obviously, the executive order shows that they have a Bitcoin strategic reserve. They can do things to buy more Bitcoin that are not a tax burden to the everyday, worker and the people of the America. And then they can even things, they designated a crypto strategic reserve, which there is no designation that they have to hold, and they can sell and buy more Bitcoin with that. And that is, without increasing the tax burden. So it's going to be very interesting. Or they just say, hey, laissez faire, all is fair game, Trump coin, Melania coin, Barron coin to the moon? Or are they going to give it more of like giving guidance of this is a security based on the Howey test, and these are not. These have to register with the SEC, and here's the process how to do it. Or is it just going to be, like I said, free for all? I can see it kind of going either way. I think it's going to be more of the free for all, and Trump's got like other things to worry about with tariffs and global markets. But we'll see. I guess the time will be the test of all of that.
Yeah, hopefully, look, I hope with whatever regulatory stuff they do, they really triple, quadruple down on education, right? Hey, there's a lottery system in my state, and I know a lot of workers that, religiously put money down on the lottery every week in hopes that they're going to win. I think they know that it's a lottery. I would hope that folks would know that Melania coin or whatever it was called is 100% a lottery. It is a gambling mechanism, or a mechanism for inside traders to make money when it's time. Either way, Bitcoin is a digital commodity and a very unique network and technology. So hopefully they triple down on the education and are willing to take on that effort for the sake of people in the United States that don't know any better. So
I'll add one thing to that. Your boy, what's his name? Brad Sherman of California. He was saying, I'd much rather people play in the California lottery. This is probably a year or two ago than to invest in crypto and Bitcoin. Very funny. And like to your point, Dom, like he's obviously the beneficiary of the California lottery, helps pay his salary versus someone gambling in meme coins or even, we don't see Bitcoin as gambling, but investing in Bitcoin is a way to go for your future. But even he doesn't want to lose the money printer that, so to speak, that is the weekly California lottery. Obviously, it's to his own benefit.
yeah, the bottom line, workers, they have such a narrow, especially lately with inflation, such a narrow savings kind of threshold. And we got to get them educated for sure on long-term savings and the value. So yeah, that's a good point. And the lottery funds a ton of stuff, but at the same time, man, a lot of people kick a lot of money to that. So,
Yep.
speaking of people that maybe have a different view, you had some good numbers on holders. I think we saw as far as like who's holding Bitcoin and how are they holding it through this whole tariff madness.
Yeah, so our boy Mitch Hoddle over at Blockware. So he had a great chart that Jacob's pulling up right now, and it shows the 63% of the entire Bitcoin supply has not moved over a year or longer. So he says we're still hodling or we're hodling. That's a very cool metric. I know that there's the long-term holder metric. He was obviously showing that on Glassnode, which is a way to evaluate the Bitcoin network, the health of the network. You can investigate nodes and mining and long-term holders and various addresses and stuff like that. So I think the underlying base of Bitcoin continues to impress. I mean, if you said in any other asset class, 63% of it has not sold in over a year, I'd be questioning just find another asset in particular that has done the same. So maybe the only other people is probably like Warren Buffett and his crew with Berkshire Hathaway. But aside from that, like it's a great global asset. And like I know our good buddy Greg Foss always says, like sometimes you sell not what you want to, but what you can. And what he means by that is Bitcoin is a global, it trades 24/7, 365. There's no off days. The stock market's down, the bond market's down. It doesn't trade on weekends. Like Bitcoin in its life, in the 16 years of its existence, has traded more than the stock market has been around since it's been digital in the 70s, I believe, or 80s when they brought it live. So Bitcoin has traded by time wise, because the stock market closes, more than the stock market has since the 70s, which is pretty amazing when you think about it.
Definitely a unique technology worth learning about, right? We always say if you do anything, just learn about what's going on. I mean, the SEC chair, right? The incoming SEC chair has some strong thoughts and has talked a lot about it. that should at least signal whatever their intention is that it's worth learning about, because you have a lot of people now tuning into Bitcoin at the institutional level. So yeah, the 63% is very impressive. And obviously where the institutional funds are at in the cycle, they are, I don't want to say taking advantage, but they're relying on the fact that retail continues to hold the largest percentage of the Bitcoin supply, and they're holding and they're in it for the long run. They're trading just like anyone else that started in the cycle. You're going to trade, and you're going to find out eventually one day that Bitcoin may be better off not being traded, but just held for the long term. So, speaking of long term, outlook. BitBlock Boom, Alema, we missed you there, but I got to sit down with Jason Lord, who is a member of IATSE, which was the local IATSE in out of Burbank, was the first private sector union to hold Bitcoin on the balance sheet and adopt Bitcoin. We asked if he had any words for workers and wage earners that were learning about Bitcoin. Take a look at what he said. Any words of wisdom for possible workers or wage earners back that are listening that maybe are thinking about, exploring Bitcoin or learning about Bitcoin as an organization?
Take your time to learn first. Understand Bitcoin first. If your exposure to this is like, it's the best performing asset of all assets in the history of asset, and that's what got you going, that's fine. I know number go up technology attracts a lot of people. Once you understand freedom goes up technology, that layer of Bitcoin, then it becomes a viable thing to incorporate into your organization, because that isn't just a financial, it's not exclusive to just your finance holdings, the freedom go up technology. That's going to permeate everything. That's going to permeate the philosophy on how you conduct business, how you transact in your own life, and it makes everything better. And that's part of leaving things better for the future, members that come in.
So a strong message from Jason there, right? It's funny. Someone wrote like kind of a bogus article about why IATSE maybe started learning about Bitcoin, but there's a member telling you right there that it's for the long term. It's for leaving things better than they found it, and offering a network where members can engage in using digital cash between each other, without having to ask permission, without having their accounts frozen like the truckers had in Canada during the protests. I thought it was very strong from him, just really saying, look, number go up is going to get you involved, but the technology and the freedom side of it is what's going to keep you in and keep you building and learning about it.
For sure.
But Alemo, he's all about number go up, so he doesn't have too many comments on that, because he's like, yo, I ain't here for freedom tech, I'm here for freedom tech.
Well, no, I'm
Okay.
definitely here for the freedom tech side of things. I'll add this one little note. So at Bitcoin 2025 in Vegas, our boy Ross Ulbricht, he's going to be. Yeah, I'm wearing the Silk Road sweatshirt here, but Ross Ulbricht's going to be speaking at the conference, which is going to be his first public appearance since getting out of jail. So quite exciting stuff. Dom, I know you and I are thrilled to be there. We're going to have a blast. Maybe we can hit the town with Ross Ulbricht and show him a good time in Vegas.
Well, yeah, I think we got to keep Ross out of Vegas. But it is cool. We figured that he would re-engage. Obviously, he's got a unique mind. He had a very unique views on Bitcoin when it was very early. And speaking of Jason Lord's comment, right, that we just listened to, he saw the freedom side of the technology, probably long before, if he ever even did see the asset side number go up, right? He got into it because of the freedom side of it. Now, people have a lot of criticisms on what he did and what he built. Totally different story, but it'll be interesting to hear his kind of thoughts and where Bitcoin is now. And I think is a voice that is much needed due to his, strong views on Bitcoin as freedom technology and why he got into it to begin with. So that'll be really cool in Vegas. That brings us, we're digging deep into the work break right now. Self-custody rule to live by. Tip of the week is brought to you by Laraka's Corner. It's one of San Francisco's oldest neighborhood bars, a great place to grab a quick drink and lose your Bitcoin, as they say, with a Bitcoin friendly bartender and not kind of friendly patrons. Local spot. Let's go to the one, the only Stefan Levera, who we caught up with at BitBlock Boom, and hear what he had to say about learning self custody.
It's a natural process. Not everybody gets straight to it. Of course, I want as many people to self-custody, but it's a journey. So generally, it means that you buy a device, you write down 12 words, it generates an address, you receive some coins into that address, and that is your self-custody. Of course, there's more to it, but that's sort of the high-level basics of it. There are, all kinds of different providers and services out there that can help people, but why should you do this? Because it gives you the power, as opposed to leaving it with somebody else.
There you have it, right? Giving you the power. I don't know, Alemo, the first time you ever, put any Bitcoin in self custody, do you remember, that time or kind of like how you felt?
Oh, I do. It was very weird because, I felt like a crazy person. I felt like a little mix of like Neo from the Matrix, but not as cool, but more like Basement Dweller, Dungeons and Dragons. I got like 3 computers lined up. I'm trying to move it to this Ledger device. And, I was checking it out and I'm like, hit send. And then of course, Dom, immediately you do it. And you're like, wait, is that a 2 or is that a 3 in the address that I just sent it to? Oh my gosh, is this going to go there? And then all of a sudden, a few seconds later, it says like pending in the mempool. And like you're waiting for the transaction to go through. And then it actually gets confirmed and you see it on your device and your own computer. It's pretty cool. I don't know. I guess I was just intrigued by it because when you always hear about like people compare it to Venmo or Cash App, and I'm not saying buying Bitcoin with Cash App. I'm saying when you're sending money to a friend, Venmoing them or Cash Apping them or PayPal, like it's like, oh, I sent Dom money and I sent him $20 or whatever for the sandwich that we had together, and it appears in his account immediately. I basically, send, put in his address, say $20, hit send with a funny little note, and it says it appears in his account. But as anyone knows, one, there's a bunch of middlemen. There's my bank, there's his bank, there's a median between it of PayPal or Cash App or whoever,
Transmitters.
and the transmitters and all these different things. And then by the time he gets it, it says, oh, you can withdraw it instantly for like a 15% fee, or you can wait anywhere from 1 to 3 days and we'll transfer it to your bank then. So, but in that whole transaction, it can be denied, it can be clawed back. It can, it takes final clearance, can be, and I know in credit cards is normally T60 like clearing, meaning that like they're loaning you the money, you buy the good, you take it home. By the time it clears a payment from the patron to the bank to the time the bank pays the vendor, it's like 60 days where it really takes for money to get cleared. And like you were mentioning, as the Canadian truckers found out, that they can shut down your bank account, they can turn off your insurance, they can, forfeit your mortgage, they can do a bunch of heinous crimes or things that basically, if you're not acting how they want, they can commit crimes against you. Where Bitcoin, no one can get in the middle of that, no one can stop that, which is really the truly an amazing and incredible part. And it took a lot of research and hours and time, but once you kind of grasp that and realize it, it's very, very cool for sure. Dom, I want to hear your story and how it was done first time.
Yeah. I remember the first time, I mean, I was just, I always tell people you don't need to do some crazy, the first time I learned about Bitcoin was such a small amount. I think like, $20 or something. And I was like, all right, let's put this thing in self custody. You get I think it was a ledger, and you're putting it on there. And I remember going to sleep that night when I had successfully done it. Yeah, if it was only $20, but you're like, I don't know, am I doing this right? And kind of setting it up. But going to sleep, I was like, this is it's an interesting feeling. Like there's something of value that I hold in my possession digitally. And no matter what happens tomorrow morning, whether there's a bank run, whether First Republic goes down, whether Venmo or PayPal says you can't send transactions to these people, you can't do that, nothing changes where that $20 of value that I had is held. That alone to me screamed value, because it's not about the $20, right? $20 versus, someone with $10,000. If you can't use the 10,000, who has more money? The person with 20. And I'm not an advocate that we're going to ever be in a situation where that happens. But look, we've been talking this whole episode about money getting moved, value getting moved from here and there, pensions losing this much, Besant saying, oh, we're up 2, we're down 1. Well, who's up 2? Who's down 1? The SEC new SEC chair where the previous one was kind of locking down accounts and doing all things like that. These people unfortunately don't learn about these things until the bad things happen. And what I'm telling the audience, the worker, the wage earner, is learn about it. Just learn about it and do it. Why not utilize or learn to use a tool that is a breakthrough tool for people whose value is at risk or preyed upon by other people? Like that's a hard stop. Just learn about it. So I love the clip from Levera. Like you said, Alemo, like it's a weird feeling, but learn self custody. And I think that brings us home on a long work break. But man, we had a lot of stuff. There's a lot of crazy stuff going on. So unless you have any final remarks, Alemo, I'm going to just say thanks for tuning in to Proof of Workforce Live. I'm Dom Bay with Chris Alemo. And stay humble, stack sats. And remember, if you're going to trade your time for money, make sure your money holds up over time. Do the homework, learn about this stuff, everything that's going on. And we'll catch you next episode.
That's a wrap. Peace.